Greetings, this is Dwayne from CFRN. This is video number 2 in the series, What If Trading Could Be Simple? We finished up with July 26th. We are beginning now with, as you can see from my screen, July 27th. Today is still Sunday, August the 19th. The very first trade on, if you haven't watched video number 1 in the series, then video number 2 and the ensuing videos in this series potentially may not make a lot of sense to you. So I highly encourage you to go back and watch video 1 in the series. It's very easy to find. However you stumbled across this, there's a couple ways. www.cfrn.net/Emini newsblog. Every one of these videos will end up there. Okay. And of course you can find them at youtube.com /CFRN. youtube.com/CFRN. Look for the series, What If Trading Could Be Simple? Okay. All right. Again, if you haven't seen the first video in the series, then you really should go watch that. All right. Okay. The very first entry on the 27th, see down here, midnight, 27th, Chicago time. Okay, that's where the clock starts. Our first pullback entry is right here. Okay, to be exact, it is right there, and that price is $13.60 1/4. The swing high is $13.61 1/2. From $13.60 1/4 to $13.61 1/2. How much is that? 1.25? Maybe 1 point? Not a big deal, and I don't want to make a big deal of 1 point, but I do want to remind you or inform you that on the first video in the series we talked about the value of 2 points and how that can be a very good living. I know everyone has visions of 5 points and 10 points dancing in their head, but the reality is 2 points a day, very good living. Go watch the first video in the series where I go into a little more detail. What I want to do because we've got a month to cover, from July 27th all the way up through where we are in August now at today, August 19th. So it's going to take a couple days for me to get through this, and if I continually repeat everything, well, friend, we just won't ever get there. All right. So the next entry would be to go short right here. Okay, now follow me here. Price opened down here. Price ran all the way back up to here. Let me move this arrow out of the way to make it a little easier to see. This candle closed, because it's a red candle, it closed at the bottom of the body. Green candles close at the top of the body. Okay. So here we're looking at a price of 1354.67, which you got to round down to 1354.50. Now, once it opened here and went here, it opened here and it went here. I don't know how far it came back down, but because this is where it closed, I know that this is where it closed. Okay, so the way we measure this is 1354.50 to the top of the body, which would be the closing price, which is 53.75. So let's walk through that one more time. 54.50 to 53.75. That's 3 ticks. Yeah. Was there potentially 2 to 3 ticks of profit in the trade? Yes. But I'm going to just call it a stop out. In the previous video, we covered that we never risk more than 2 points on a trade. Which is another plug to go back and watch the first video. Okay. Alright, let's go look at our next entry, which is to go long. Maybe you don't know why this is the next entry. Go watch the video. Okay, the entry here is going to be 13.59. Now our system is, we not only know that we're supposed to go long, we know at exactly what price. That's what our indicators do. They tell us exactly what price to go long at, and this is telling us to go long at exactly 13.59. Now if you look left, you can see that this trade drew down to 13.58 1/4. So was there a drawdown? Yes. 3 ticks. Call it a point. Get a 1 point drawdown. You should anticipate drawdown on every trade you take, no matter what method. Okay. Alright, so let's not forget our entry price, which was 13.59. We're just going to keep following it. The swing high was 13.84. $25-point move. I'm not making this up, I'm just showing it to you. This is where our system said to go long. This is where the market went. I have no control over where the market goes. The only thing we have control over is the math behind our system. It tells you where to initiate your position, short or long. And it said to buy 13.59, which turned out to be a splendid idea. The next entry was to go short, and it said to go short right there at 13.80.75. The swing low was 77. From 80.75 down to 77. So that's 3 3/4 points on this move. Max, stem to stern. Now, is there any reason to think or believe you would get all of that? Maybe you would, maybe you wouldn't. Once you take our course, would I expect you to at least get some of it? Yep. And worst case, worst case scenario is that by the time this thing moves 3 3/4 points, the worst that's going to happen to you is that you're going to get stopped out at break even plus a point. So the worst that happens here is you make a point. Best case scenario is maybe you could somehow figure out to get out right here. You know, maybe it starts putting in, you know, these little double bottom here. Maybe you go, ooh, I better get out. So you still get out with better than 2 points, if that's how you roll. All right? Okay, moving on. Now remember, in this video series, I'm only highlighting the first trade setup after a change in direction. So I'm giving it one long, one short, one long, one short, one long, one short. Are there multiple entries on the long side and multiple entries on the short side? Yes, there can be, and during the course we teach you how to observe those and take advantage of them. But for now, we're just going with the one. All right, right here, this is at 1378.04. 1378.04. You can't buy 04, you got to round it to a quarter. 1378.25. The low of this candle is 1378.25. We trade market if touched. And because we have to round up this figure from 1378.04 to 1378.25, we get filled at a quarter. Typical slip on that's one tick. So it's going to be 78.5 where you actually get your fill. And the high is 80.50. So what is that? It's a couple points. Okay. From here, if you, each one of these squares, the way I've got it scaled right now at the moment, is good for 1 point. So it's kind of easy to just eyeball that this goes, you know, 1, 2 points. Okay. Remember the entry was at 78.25. Swing high 80.50. All right. Okay, pullback entry over here. To go short. Remember, one long, one short, one long, one short. Okay, the high of this candle is 78.25. The MA1 is at 78.39. So we know our entry, MIT, is 78.25. Okay. Now, there's a drawdown up to 79. And then the swing low is 1375.75. 1375.75. So let me give you those numbers again. The entry sell market if touched 78.25. 78.25 drops to 76.75. Yeah. The next pullback entry to go long is right here, because the MA1 is 78.45, so we got to raise that to 78.50. The low of this candle is 78.75. Is that right? Let me check it again. Yeah, so you would not have gotten filled until this candle. Okay. So you're in a long trade. You get a drawdown. You get back to break even. You're at, let's see, the entry was $79, right? So it gets up to 1380, and it taps 1380, and it taps 1380. 1, 2, 3 times. So is there a potential in there to take a point? Well, there is. Okay. You may be thinking, well, I want to take more than a point. Okay. If you want to take more than a point, nothing wrong with that. It's just that on this particular trade, if you want to take a point, I think you're going to get stomped out. Let's go back. If the entry is at 79, after it goes up and tags 80, 1, 2, 3 times, having a hard time getting through that number, it pulls back to 77. So if you get in at 79, when it pulls back to 77, you get stopped out to the tick. Okay. So there was 1 point available, but got stopped out. Now on this one, the previous video, I talk about needing some space. Okay. See how we have space right here? In order for the trade setup to be valid, there's got to be space. On the short side here, we never get any space. There's no space. So we don't have a valid setup over here. But because price did get below the MA1, and because the MA1 did turn red, it makes our next setup to go long valid. And here you can see that we have space. Not a lot. And you know what? Some could argue, because there's a tick, there's one tick in there. The high of this candle is, hang on, the high of this candle is 79. The MA1 is at 79, so or 79.12. Rounding it down would bring it to 79. I can't count that. No. This is space. That's not. Okay. So the entry to go long is here. At what price? It's actually going to be up right there. And that price is 13.80 and a quarter, and it runs up to 87.50. Okay, so if you want to jot those numbers down, 13.80 and a quarter up to 13.87.50. 7-point move. Okay. The next move down tells us to go short. And there's no beating around the bush. Trade gets stopped out. I told you on the previous day where we had 10 yes trades and one trade gets stopped out, I told you that that was a bit abnormal, and it looked as though I picked the first day to curve fit the data to, you know, try to impress you. But then I went on to tell you that you'll see the reality over the next few trading days. Alright, so we get up here, we got some space, we got a pullback. Time to go long. Okay, do we know exactly what price to go long at? Always. Every trade will always know the exact price to the tick to go long. And on this one, it happens to be 1378. Okay, get long at 78. The swing high. Well, price never changes, so you know, I could argue this one over here, but let's just be more realistic and go 81 and a quarter. So from 78 to 81 and a quarter right here. Okay, that's 3 points. Now that's our. Now here's one of those instances where I said, will there be secondary trades after price moves? But I said I was going to keep it to just the one side. Now, didn't I? That's what I said. So that's why I'm not going to even talk about this one. Okay? Because we got our long trade. It went up 3 points. We'll just move on. We're looking for a short. There is no valid short there. Here, we get a valid short trade. Unfortunately, the market decides not to go short. And this pullback here, the high of that candle was 79.50. Rounding it down, 79.75. That came within 1 tick of being able to get filled. So if that had gone 1 tick higher, we would have had almost a 2-point trade. But it didn't, so we don't. And it got stopped out. Okay. The next valid entry is going to be this trade here to go long. Now this one gets a bit tricky. It's the first time we've seen this in these 2 days. The entry to go long comes here at the open of this candle. See that? We have immediate drawdown. Okay, the entry is 1384. And we immediately draw down to 1383. Then we work our way up to 1385. So that puts a point in the trade. Now since you're on the south side of the MA1 and you got this little double top here, you might be very happy to get that, 1 point or 3 ticks. If so, is there a point of potential in here? Yes. 3 ticks to 4, yes, depending on your fill. If you stay in the trade, is there more? Yes. If you took something here, whatever that something might be, and you decided, hey, okay, now I'm free to take the next valid trade setup, that's going to come right here. Now let's see where the MA1 is. The MA1 is at 84.89, so you got to round that down to 84.75. The highs, no, so the actual fill would have been here on this candle. You'd have got filled right here. Okay. All right. The drawdown was up to 86.50. Let me do some fast math. 86.50 minus 84.75 equals 1.75. However, 84.75. If you got slipped a tick on your entry, which is usually the case on a market if touched, you didn't get filled. You got actually filled at 85. Make sure I'm telling you this straight. $84.75, and this high over here is $85.75. In all fairness, honesty, common decency, I'm just going to go ahead and say this one got stopped out. To the tick. Had you filled 1 tick better here, you'd have stayed in the trade and you'd have done very nicely. Okay, how many days did we just cover? We started on the 27th. Did we not? Yeah, we started the new video on July the 27th. Okay. And we had there's one stop out, 2 yes trades. Then we had this huge outlier that went for, what, 25 points? Then some more ordinary trades. I need to see where the date changed, though. 27th, 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 27th. Why does it go from the 27th to the 29th? '27th, 27th, 27th, 29th. Why does it go from the 27th? Oh, the 29th must have been a Sunday night. Oh, that's what it was. Okay. So we were in Friday on the 27th, and then we got into the Globex Open on the 29th. Okay. And now we're at a Monday morning. Okay, so what we just did was 2 days. We did Friday the 27th, Saturday's the 28th, markets are closed, and then the 29th, this was the Globex Open. So on that Globex Open on the 29th, we caught that first trade based on this setup for a maximum potential of 3.75. So I'm going to go ahead. This is at 27 minutes we've been going on this video. But I've already ran into not only the 29th, which was the Globex Open. I've already done July the 30th, which is Monday. And again, you can always back this up and take a closer look. Alright, but this is where July 31st starts right here. Okay, and this last trade, we call that a stop. So we're going to leave that at that. Alright, remember, we only risk 2 points per trade. So we had 1, 2, 3, 4, 'So we had 4 trades that got stopped out beginning on the 27th. Okay. Okay, now this covers July 27th. It also covers Sunday night, July 29th. Friday, July 27th, Sunday, July 29th. And then Monday, July 30th. So now you know everything that's on this video. Okay. Now I'd love to whoop and holler about the one that went for 25 points, but I'm gonna resist. I want to keep it real. All right. Did it really go 25 off of this signal right here? Yeah, it really did. Did this really get stopped out for 2 points? Yeah, it sure did. Okay. So let's count the stops. There's 1, 2, 3, 4. Okay, so we have 4 trades stopped. So over this 3-day period, 4 trades were just stone cold stopped out. Okay. Now we'll count the trades that gave at least some profit, some reasonable profit. We got 1, 2, 3, 4, 5, 6, 7, 8, 9. That's it, 9. We'll call them yes trades, lack of a better term. Okay, 9 yes trades. 4 trades got stopped out over a 3-day period, a Friday, a Sunday night Globex session, and Monday. Now that's compared to the Thursday preceding, where I only did 1 day on the recap. Actually, it was a day and a half. July 25th and 26th, we had 10 yes trades and 1 trade stopped out. Didn't I tell you that it wouldn't always be that sweet? That there would be some reality to deal with? Okay, now this is what reality looks like. 9 yes trades, 4 trades stopped out. That's still a pretty good percentage. The fact that some of them went for only a point, yes. Some went for more than a point, yes. Some went for more than 2 points. Yes, one actually went 25 points. Yeah, it actually happened. Okay, and that's the truth about trading. Every day is new. Every day is unique. I highly encourage you to come spend time with us here in the live trading room. Don't just come watch us, put on trades. Download the indicators, download the platform, get the data flowing, wrap your hands around these indicators. This trade here is not just a day maker, that's a week maker, that could be a month maker. Did we have the entry? We did. Okay. Can you have the entry? You can. But here's where it all starts. When you go take the free trial. No credit card required, no obligation. You just go to that link, put in your name, put in your email address. You'll get all the information via email. Be sure to check your spam folder, your bulk folder, wherever emails sometimes end up based on your email client. Click the confirmation link. We don't believe in spam. We use a double opt-in confirmation process. So unless you click the link in the email we send you, and because it's an automated response, we will send you the email. Your job is to find it. It'll be there within 5 minutes. Click the link. We'll send you the additional instructions that you need to download the indicators, install them on the platform, and the link and the password to get into the live trading room for the next day's trading. You get 5 continuous days in the live trading room. So if you sign up on a Wednesday, that's okay. Your free trial will run through the following Tuesday. If you sign up on a Wednesday afternoon, which means your first day in the live trading room is not until Thursday morning, then your free trial is going to run all the way through the following Wednesday. So actually you end up with the indicators for 7 days, not 5. You have them at your disposal for 7 days. Okay? But you have 5 days of access to the live trading room to ask us all the questions you want to ask, and we're very happy to answer any questions. With that, I'm checking out, clocking out, and I hope to see you tomorrow in the live trading room. Good evening, this is Dwayne from CFRN. Today is Sunday, August the 19th, 2012. It is 5:36 p.m. Pacific time. I'm going to make a video. I won't tell you it's going to be quick, although I would love for it to be quick. But if you've watched any of my videos, you know they usually aren't quick. I will try to get to the point early on so that if you don't want to watch the entire thing, you'll get the idea. What I'm showing you here is a chart of the S&P 500 Emini futures. And the question simply is, what if trading could be simple? What if? If you've been around any time at all, you're pretty much convinced that that's not possible, that it can't be simple. If it were simple, then everyone would just do it and everyone would have a lot of money, and or the markets would simply go away. Okay, fair enough. I'm going to walk you through some trade setups using one of the indicators from our CFRN indicator set. There's a total, I think, of 8, and we do use several at a time when we're in the live E-mini trading room each day. When you take the free trial, you get 2 hours in the live markets for 5 consecutive days. Alright, here we go. There's the address. CFRN.net apply. See, how do we blow that up? There we go. Properties. Let's go 24. That's huge. CFRN.net apply. Okay. The indicator on the screen is the CFMA1. That is the backbone of the CFRN indicator set. I'm sorry we don't have a more zingy kind of a name for it. It's kind of generic. We wrestled over a few things, and a couple years ago we finally just gave up and said we'll call it the CFMA1. And people go, oh, CFMA1, I get it. What moving average is that? Well, it's not. It's a compilation of a whole lot of math. Okay, there's a lot of mathematical heavy lifting going on. But the basic concept of the indicator is this. If the MA1 is red, we anticipate lower prices. If the MA1 is blue, we anticipate higher prices. Red, lower prices. Blue, higher prices. Okay, let me layer one more thing on that. When price gets on the south side of the MA1, that's sort of our heads up that it will probably change to red. When price gets on the north side of the CFMA1, then we have a heads up that it's probably going to turn blue. Okay? Now, a lot of times people go, well, before I take your free trial, I want to know how much it costs. cost? Well, it doesn't. It's free. That's why we call it a free trial. They go, no. I want to know when I'm done with the free trial. I want to know how much it costs then. And you know what my question is for them? I go, why? They go, well, because I want to know when I'm done with the free trial how much it's going to cost me. Okay. But the purpose of the free trial is for you to determine if our indicator set has any value for you. So if I told you it was $10,000, you might say that is a lot. If I told you it was $100, you might say that's very cheap. If I said it was $10,000, you might go, wow, that must have a lot of value. Or if I told you it was $100, you might say, well, that can't have any value. No matter how you say it, those statements are all erroneous, false, and full of holes. Unfortunately, when people go looking for a Emini futures trading course or a Emini indicator set, and really what you need is the two, because what you need more than anything is to learn how to trade. Okay. One thing I will say is our course runs 90 days. I will say that once you become a CFRN partner, you own our indicator set for life. Okay. So as long as you're going to be a trader, you got it. Okay. So back to how much does it cost? The reason you don't see the price splashed all across our website, and I even went through some images last night and some other sites and looked at, the price is right, guaranteed lowest price, best price yet, tremendous savings, huge value. Okay, that's one person's interpretation, and that one person happens to be the person that's trying to sell you the course or the indicator set. They're telling you that at this price it's a great value. But how do you know that? You have to act on blind faith. We do something that is unique and different. I don't know of anyone else in the industry that does this. If you have an interest in learning to trade, if you have an interest in our course and in becoming a partner and owning our set of indicators, then what we do is we ask you to use the indicators for 1 week. We ask you to join us in the live trading room for 1 week. We don't want you to simply watch our screens and watch us put on and take off trades. We want you to do that 2 hours a day for 5 days. But because we have a global marketplace, we want you to spend the other 22 hours of the day using the charts, watching the live data flow, and actually using the indicators and the simulator to put on and take off trades. Because this way, at the end of a week, you'll have a pretty good idea what this course is worth. Now, a lot of people who are smart, they go, well, if they don't put the price up there, it must be a lot. Okay, I understand that thinking. But let me tell you, this course and this indicator set, whether it ultimately has value for you or not, will depend largely on you. Some people don't want that responsibility. Our course and indicator set is less than 1/3 of many of the popular E-mini trading courses and indicator sets out there. It's a one-time charge, and again, it's less than 1/3 of what many vendors charge. So why am I hesitating to tell you the price? Why don't I just go ahead and spit it out, and then you can click on to the next video on some other site? Because I'm challenging you. I'm saying, hey, if you really want to learn how to trade, why don't you go find somebody who will let you use their indicators for a full week Why don't you go find somebody who will teach you how to use their indicators for an entire week and actually let you use them. And then when you find the one that kind of hits home, makes sense, and works for you, I'm going to suggest that you buy that one no matter what the cost. Because if you buy it and you put it on the shelf, so to speak, and never use it, it has zero value. It doesn't matter if you paid $100 or $100,000, right? And so that's part of why we kind of put you through the boot camp, if you will, of the free trial. We want to see you download the platform. We want to see you install the indicators. Because if you aren't willing to invest some time, however much money you end up investing in somebody's indicators and somebody's course, it's going to be a complete waste of money. So, see, whether you become a CFRN partner or not, we're trying to save you money. Okay? So first we ask for an investment of time. Before the week's up, you'll know everything you get, you'll know what it costs, and one last time, it's less than a third of what many popular courses and indicator sets sell for. Do we think it's the best? Well, considering that we have taken most of those courses and own most of those indicators and have built and created this curriculum and this indicator set ourselves, then I'm going to say, in our opinion, yeah. This is with our combined 10 plus years of experience in the business, closer to 20 probably. If I bring in everybody under the roof, the number grows exponentially. But you need to take the free trial. And if you're not willing to take the free trial, it doesn't matter how much it costs. Because that should be your first investment. You've already invested 11 minutes listening to me rattle on. So why don't I just go through and show you some trade setups on using just one indicator. Okay, no confirming tools, no ancient trading secrets, just some kind of simple point and click. Okay, now keep in mind there's a lot of heavy mathematical lifting going on in the background. Okay, all right. Now I rolled my charts back as far as they would go without loading more data, and they rolled me back to July the 25th. Today is August the 19th, so this is not like I'm curve fitting data. And you have to be careful of that. People do curve fit data. What does that mean? It means they go and wait to find a day where price just so happens to line up perfectly with their indicators. They take a lot of pictures, make a lot of videos, and that becomes their sales pitch for the next N number of days, weeks, or months until the stars align again, and then they take some more pictures and make some more videos, and that becomes their sales pitch layered on top of the other sales pitch. You see what I'm saying? So I'm just going to show you like a month's worth of data. Globally, round the clock, we have partners around the globe. We have partners in places that I have difficulty pronouncing. So we're not all trading Wall Street hours. We're not all trading the S&P 500 Emini futures, which is a good thing because our methodology and our indicator set performs well across multiple markets and multiple time frames. You want to trade corn? Okay. Soybeans? Not a problem. Currency futures? Okay. The yen? We got it. We cover it. Okay, let's get a move on. All right, we're looking for price to break below the CFMA1, and then we are looking for price to pull back to the MA1. Okay. Now, if you look right here on my screen, that price is 1334.58. You can't sell 1334.58. You have to round that down to 1334.50. We trade market if touched, MIT. The high of this candle is 1334.50. So the order would have filled to go short at 1334.50. Price ultimately dropped to a low of $13.31 and a quarter. $13.31 and a quarter. And what I said the price up here was $13.34.50. All right, let's do some fast math. 13.34.50 minus 13.31 and a quarter is 3.25. So this move down was good for 3 1/4 points. 1 point in the S&P 500 E-mini futures is worth $50. And so that moves stem to stern, one contract, $162.50. I'm not going to break every trade down like this. I just want to give you some kind of a baseline to make your own. You can do your own calculations. You can, as I go through this thing, you can look at trades. You can hit pause on the video. You can then go over to the calculator, and you can figure out the prices yourself. Okay? All right. So one contract, $162.50. Simple math. If you're trading 10 contracts, $1,600. The next trade setup, price gets on the north side of the CFMA1. See, it does it on this candle right here. It then pulls back, and we are looking to enter on the pullback. Okay. Now, this is important. There has to be some of this empty space. I'll show you some examples here in a minute where you'll see why that's important. Now, let's go draw our line right here. 13.32.75, but that's 13.33. The low of this candle was 13.33. So that's where we would enter. Now the beauty of this is you know way ahead of time where you're going to be entering. Also, because we are not scrolled all the way to the right edge of our chart. I mean, today's August 19th and we're looking at July 25th. When we get to the end, you'll see that over here, the price that you enter at, it's colored. So you always know exactly to the tick where your entry price is. It's never a question. Well, you know, no, none of that. None of that. You know exactly when to enter the trade and at what price. Okay? On this trade, we know that the exact entry was 13.33 and the swing high was 13.35. The next valid entry was right there. At 13.33.75. Price dropped down to 13.32 and a quarter. There's the entry. It's market if touched. Price drops from the high of this candle, it's 1334. The low of this candle is 1332 and a quarter. Okay. All right, the next valid entry will be to go long. Right here. That price is 1333.92. You have to round that up to 1334 because you can't buy 0.92. So there's the entry at 34, and it runs up to a high of 36 and a quarter. Okay. The next valid entry, and oh, by the way, I'm only going to go over the first trade entry in each direction. Are there ways that you can take multiple entries in the same direction? There are. I'm going to keep it simple and cover just one. So there's the entry to go long. The next valid entry to go short comes right here. Well, actually, we need a little space. So let me back this up. Oh boy, now I lost track of where I was. Oh, it loaded more data on me. Okay, the first pullback on the south side right here. Okay, is 1333.75. Price drops to 27.75. 33.75 down to 27.75. That's about 6 points. Yes? 5 points. No? 6 points. That's a 6-point move. Alright, let's keep going. The first pullback entry would be right here, going long. Now that price is going to be 1349 and a quarter. Price goes up to 57. I'll say it again. The entry was at 49 and a quarter. And price ran up to 57. That's about another 7-point move. Okay, right here, 1351 and 11, we have to round that down to 1351. The high of this candle is 1350.50. So it never pulled back over here far enough to trigger us in. But it did right here. Now let me say this. I haven't mentioned this yet. We never risk more than 2 points. Not with this trade and not with this trade setup. So what does that mean if we attempt to sell the market short? Right here. It means we get stopped out for a known amount 2 points. That simple. The next entry is right here to go long at 13.52. The price goes up to 58.75. We say that again. The entry to go long is 13.51. It's 13.51.96, but you got to round it up to the nearest tick where you can actually purchase. So 13.52, and it runs up to a high of 58.75. 6+ points in that move. Okay. Market starts to get a little flat here. Okay, there was a nice move there. Now we come back. Our first valid entry to go short is right there. Okay, on this pullback to 55.78, you got to round it down to 55.75. The swing low is 53.25. So from 55.75 down to 53.25. Okay. The next valid entry to go long. Now I'm pretty sure you've caught on to how simple this is, right? We're not looking at any advanced decline line. We're not calculating a million different things. We're not verifying it against some other market. We're not looking on CNBC to see if they're smiling or frowning. This is based purely on math. All the heavy lifting is done in the background. All you have to do is observe what's happening in front of you on your chart. Okay? And our indicator set will actually tell you that it's time to go long, and it'll tell you at exactly what price. Like right here, it's going to tell you that you need to go long at 13.57. Okay? Over here, 57 is going to be all lit up. You're going to know that, hey, I just need to buy 57. What's the swing high? 13.59. Okay. Small move, 2 points. But 2 points really is not a small move. 2 points is a great move. 2 points, you can earn a very nice living. We have a regular guest on our radio program. He trades 9,000 to 10,000 E-mini contracts per day. That's right, per day. And a good day for him is 2 points. Now you might think, well, gee, if I could afford to trade that many contracts, I would only need 2 points. That's not how he got there. He got there by realizing he only needed to get 2 points a day. Now think about what I just said. He doesn't only need 2 points because he can trade a lot of contracts. The way he got himself into the position to be able to trade a lot of contracts is because he realized early on that he only needed 2 points a day. You need to do some serious thinking about that. If you're a one contract trader, and you should be in the beginning, well, that's only $100. Okay? But over time, as you become a 10 contract trader, or however many contracts you ultimately trade, you might trade 3, you might trade 5, who knows? That will be determined by you, your patience, your discipline, all of that. But if you're trading 10, a 2-point move is $1,000. $1,000 is $5,000 a week. It's $250,000 a year if you take a couple weeks off for vacation. Now trading is risky and you can lose all of your money. Okay? Futures trading is risky. You must use a stop, and even then you can lose all your money and potentially even more. This is not a solicitation to trade E-mini futures. This is simply to show you what our indicator set looks like, give you a little bit of information about our course, our way of thinking. You should consult with a licensed professional before you make any decision about investing in anything. Okay, that is the official government disclaimer, but it's also from the bottom of my heart. Don't go just diving in because this thing, oh God, this is easy, anybody can do this. Well, back to what I said earlier. If it was easy, then everybody would be doing it, and ultimately there would be no market. I didn't say it was easy. What I said was trading's not easy, but it can be simple. Huge, huge difference. We've managed to walk through one entire day, and it's taken us almost 30 minutes because, well, I talk a lot. I'll show you one last trade from this day. That entry would have been at 1358.50, and the swing low would have been 57. So this trade only had a 1.5 in it, stem to stern. Okay. If you only took a point out of that, well, you took a point out of that. Fair enough. I'm going to end part 1 of the video here at 30 minutes. I realize now that because I went so far back in time to July the 26th, what in the world was I thinking? There's no way I'll be able to get through a month of these trade setups in one video. So we're going to have to call this part 1. I'll give it some fancy name and I'll call it part 1. But remember, we never risk more than 2 points in a trade. So let's just back up to where we started. Right here. Okay. We had 1, 2, 3, 4, 5, 6, 7, 8, 9 trades, 10. There's actually 10 trades. You can see down here this is midnight of the 26th. I'm not sure what time we started on the 26th. Let me go back and find that. Well, we actually started on the 25th, didn't we? And that's okay. That doesn't change anything. Okay, the first trade we marked up was on the 25th at 17:19. So if you weren't in the military, that's 5:19 in the afternoon, Chicago time. But remember, these are global markets. They trade 6 days a week. So on the one day that we've recapped, we had 10 trades that moved in our favor, that allowed you the opportunity to take some profit, and we had one trade that got stopped out. Now it would look like and seem like and sound like that I went back and found the picture perfect day. If I were you, I would certainly think that, because the day that I rolled back to and picked at random showed 10, we'll call them yes trades, and we had one trade stopped out. Past performance is no guarantee of future results. Now, is that an unusual ratio there? 10 to 1? Yeah. I got lucky. I scrolled back to a day that was better than normal, better than average, whatever label you want to give it. But that's okay. I'm going to walk through the entire last month. So you'll see days where it'll flip-flop the other way, perhaps. Some days where there's a break-even number of trades, or whatever it unfolds. Because I haven't done this ahead of time, I'm doing this live in real time. I'm just realizing that I can't do it all in one sitting and all in one video, because the file will be too huge to upload, and I need to have a life. So we got one in the can, and we'll make a little note here that we're going to pick up in the next video. July 27th. In fact, that might be a great way to do it. I'll make a series of videos. I started on the 25th/26th, and then I'll just do the 27th, and depending upon how quickly I move through each day, maybe I'll put a couple 3 days per video. Alright, and this is again just to show you one of the simple methods that we have for trading E-mini futures, that you don't have to overthink it. You don't have to learn too many things. The most important things you have to learn is patience and discipline. And those are things we can't give you. We can hand you charts, and we can hand you data, and we can hand you indicators. What we can't hand you is patience. What we can't hand you is discipline. What we can't hand you is self-control. Those are things that you have to bring to the table. No vendor can give you those things. Alright, I'm going to wrap it. Thanks for tuning in. We'll be back with video number 2 in the very near future. To take the free trial, once again, go to you've already invested 30 minutes, 35 minutes. You might as well take the free trial, right? There's the address, cfrn.net/apply. No credit card required. We don't need to know your mother's maiden name, the street you grew up on, your favorite pet, any of the stuff that is not, give us a legitimate name, a legitimate email address. We're good to go. Fair enough? All right. Hopefully I'll see you in the live trading room. Have a good evening.